Welcome back, everyone. Here we are with CTRM, Castor Maritime Ctrm. And before we jump into this chart, I do want every single investor and viewer to be aware, to stay tuned on in towards the end of this video, because we have a lot to cover about how the S&P 500 has been reacting since Friday, how the 10-year treasury is doing, and what we want to focus on moving forward. And is this going up temporarily, or did we see the bottom back on last Friday? So stay tuned for all that information, and let's jump right into it here with CTRM. So CTRM broke through resistance, definitely used it as support. You could see that right there, bounced off of it, reached newer highs, and slightly leveled off. So let's see our new resistance and support and where the 50-day moving average lies. So the 50-day moving average is at 87.65 to be exact. Anything below that is bearish, anything above that is bullish. So right now, the bulls are maintaining leverage, and for them to continue, they need to break through resistance and reach newer highs. So let's go ahead and see here what is important for this chart. So the bulls definitely need to break through resistance, and if they do not accomplish that, this could start to pull down a little bit lower, and we need to watch this carefully, because even though between support and the 50-day moving average we are in bullish territory, the bears could start to gain control and leverage over the chart. So you want to watch that carefully. I do want every single investor and viewer to be aware of that, because even though it looks like we're pretty far away, this is a penny stock, and this moves cent by cent really slowly upwards, but it can move really down fast. So keep that in mind. So our support here is 95.97. If that gets broken through, this could be on its way down to newer lows, new support levels, and getting deeper and closer to the 50-day moving average to then end up deeper into bearish territory. So by breaking through this support, it can get deeper into the midway point and then deeper into bearish territory by breaking through it. So you want to watch carefully. Now, do you want to have a midway point? That's completely optional, and you could use this point right here, 91.45, which is a 4-cent difference, and then a 4-cent difference from the 50-day moving average. So that's a nice midway point right there. Completely optional. I would use it. You don't have to, but you can look at it to see if the bulls are trying to reappear and bring it back up, or are the bears tearing this one down fairly fast. Now, our resistance is the highest point that we've reached since this low here and in this upward trend. So let's see what our resistance is and why it's so important. So it's 101. The first thing is, if you round it down, you can round it down to $1. You can round it down to $1.01. Regardless, it's above $1. That is probably one of the most important things right now for this stock, to end up being above $1 and hold itself up above that point. So 101 definitely needs to be broken through, turn into a support, so the bulls can continue this momentum, pull further away from the 50-day moving average, and reach newer highs. So I do want every single investor and viewer to be aware that 101 is a good starting point for this stock to start showing some strength, because it needs to go above $1 and stay above $1. So we're going to have to see how things continue to roll out, how it continues to play out. But right now, it's so important to be aware of the fact that 101 is just the beginning of this getting deeper into bullish territory, because even though the 50-day moving average is down here and we are slightly in bullish territory, this really needs to cross $1, 101, get further from it significantly to then actually be gaining that control and leverage in bullish territory. This is just the beginning, and it needs to continue if the bulls want to maintain control over the chart, because that rejection right there, a little bit above $1, and then again right here at $1, is not a good sign, and we're sitting right now at 96.70. So we want to watch this carefully and see how it continues to play out. As always, guys, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watch this video. Stay tuned to the end, because we have a lot to cover, and I won't want you guys to miss it, because we're going to talk about the 10-year treasury, how it's reacted, the S&P 500 index, and if we saw the bottom back on Friday. Stay tuned. Why is the market up, and have we hit the bottom of the crash, quote unquote, or correction here, right? That's the question. So the first thing is stimulus is in the works of being passed. Everyone's excited. That's building that anticipation and excitement moving forward. But also the 10-year treasury has hit a peak here on Friday of 1.57. It had cooled off. It ran up to newer highs on Monday. And now from Monday to today, it's been dropping down and cooling off. And it's been hitting newer lows every single time. This is helping the market tremendously, that the yields are going downwards. At some point, if this was to not go any lower, the market could continue to go upwards, like I've said before, because they will detach from each other. But right now, we've noticed the effects of this going up really fast, bringing down the market, and it going down pretty fast and bringing up the market. So we need to see them both detach at some point, but right now they're correlating pretty well. So one goes down, one goes up. Now, this has also the mix of the anticipation of stimulus. But another thing too, this may have been the bottom for one reason only. The fact that institutional investors and retail investors were loading up the boat. If you saw my previous videos about that article, this was fueled. I mean, that run was so fast that if you're looking at it from the sidelines, you're like, someone knows something, right? So it was in the hopes of stimulus. Stimulus is passed. Then this spikes downwards because of the fact that we hit an all-time high again of 1.6 and some change in the 10-year treasury. And then today we have a run as it's going downwards. And now it's going lower and the market is still going downwards. So that's how we're noticing that there will be a detachment coming soon. But I wouldn't be surprised for this to go lower or hang out sideways and for the S&P 500 index to dip a little bit more in the coming days, because it's just natural. The indicators in my chart are showing that, and all the different indicators that I've looked at, they're showing that there is some room for a potential slight pullback a little further. Even if it spikes up, pull back a little bit further, and then if there's strength in the market, it will spike right back up to newer highs or try to break even. Now, the first thing I'm noticing is the fact that if we stay away from down here, and could we retest that? Possibly, but if we stay away from that down here, this is showing strength in the market overall, and that may have been the bottom. So all these dips were an opportunity, and if we retest this, every dip towards it, and even if we break through it, is an opportunity, because in the midst of this downward trend is the beginning of the next bull run. The only thing I can see pulling down the market in the near future, if the Federal Reserve talks about it next week or next month, whenever they decide to do it, is the year-over-year inflation. And that's going to surprise the market just a bit. Don't be surprised. Be prepared. I always tell you guys, it's not about being a bear. It's about being prepared and aware. As always, guys, if you learned something new, subscribe, share this with your friends and community. Thank you guys so much for watching, and let's make some money.